Yeah, I think that's one of the reasons for President Trump to think that tariffs are a good idea, but it's not the only reason. So, there will be some disruption, and I think when you do put tariffs or any kind of tax, because that's essentially what a tariff is, a tax. If you put that on any goods and services, there will be disruption in the supply chain. It distorts markets in many ways. But in this case, the president and much of his administration believe that it's necessary for a few reasons. Now, you mentioned the primary reason, and one of the reasons he was elected both in 2016 and 2024 is that the American industry has been gutted by these cheap foreign imports, and in many respects, that was an unintended consequence of free trade, especially free trade with China, beginning in the early 2000s. And so, some of these industries have really been gutted. Entire towns and states have been really gutted by this free trade, and which has essentially ended up being importing cheap labor, not literally importing the cheap labor in terms of bringing workers into the country, but importing goods that were produced by cheap labor, and therefore disrupting the supply chains within the United States borders. And so that's been something that it took a long time for economists and other analysts to understand the unintended consequences of free trade. But it's pretty important. Right now, 10% of the consumers in America account for 50% of the consumption. So in other words, the top 10% are doing quite well and are consuming 50% of the goods produced. But unfortunately, the other 90% consumes 50%. So there's been some unequal distribution of both wealth and income caused in many respects by free trade. Scott Bessent, the Secretary of State, made a great comment last week. He said, the cheap goods isn't necessarily a fundamental part of the American dream. I think, and that's important to keep in mind that, that there are cheap goods. It does make some things more affordable, and there will be disruption to supply chains, but we think it's worth it in the long run. But then you have to look at the other reasons for tariffs. One is revenue, which we desperately need because of the $36 trillion debt. And much of that, one third of that came in the last 4 years. So that has to be addressed. Again, protecting critical U.S. industries, not just, but if you look at industries like shipbuilding, industries that are that like rare earth minerals, critical metals, those are things that have to be controlled for national security purposes. And then you have the negotiating tool, and you've seen President Trump use tariffs as a threat in negotiations, and in many respects, it's worked already in his second term here.
Mhm. You've been speaking about debts or countering the debts issue, but we're already seeing pushback from the US allies, Canada, the UA, the
Yeah.
EU, and Australia. Now, do you think these tariffs could trigger a new wave of trade disputes, and how will that reflect on the US revenue and its ability to stand? Uh, to stand for the debts, its debts, and cover them?
Yes, yeah, no, it's a great question, and I think what we have to consider here is there's going to be some offsets, right? There'll be some challenges in some supply chains that will be offset by benefits in other supply chains, and it's the same thing with revenue. So there is a chance that tax revenues will go down if trade slows down, but that'll be offset by tariffs in many respects, and then same thing with prices. But will go down on others, and there'll be more competition in the U.S. to bring those prices down. So there are some offsets here, but I think one of the most important reasons we have to use new methodology and think differently is the debt. And I won't get into the economic calculus of it, but the simple formula is that when the U.S., run trade deficits with our trading partners, we fund that with the capital markets, with debt. And because the U.S. has had the biggest bond market in the world, the biggest capital markets in the world, we're in the US Treasury market specifically, we've been able to borrow and fund these trade deficits for generations now. But unfortunately, by going from 24 trillion to 35, 36 trillion in debt in just 4 years of the Biden administration, we now have a debt problem, I should say, a bigger debt problem. And it's really unsustainable. Also, because of the inflation of the Biden years caused by this reckless spending,
Mhm.
interest rates have doubled. So the Treasury now has to make interest payments every year that are 2 times what they were in terms of the rate, but several times higher because of the additional debt that's been added on. So it's not going away. And one of the ways to address that in the long term is reducing our trade deficits. Again, we didn't really mind funding those deficits when money was cheap, but money is not cheap anymore, and our debt is a lot higher. So we've got to do a lot of things, reduce spending, increase GDP growth so that tax revenues go up, but also obviously deregulate so we have more business investment, more growth, more wage growth, most importantly, and therefore more tax revenues. But in many respects, the trade surpluses enjoyed by Canada and Mexico and the EU are unsustainable. Not only are they unfair because we're basically funding their welfare states and protecting them with our defense and security, but more importantly, it's unsustainable with the potential debt crisis we have in the US.
Well, Mr. Trump has said before that these measures are to encourage the U.S. production. Now, industries that rely on steel and aluminum, like the
Right.
auto manufacturers and the construction, they are warning that prices will rise and jobs could be lost. Now, how significant will the impact be on the U.S. economy in this case?
Yeah, there could be some effect on it, right? And unfortunately, with tariffs, there's not a lot of data on this, right? Because tariffs haven't been used extensively in quite some time. Perhaps you could argue 100 years. When Trump put tariffs on a lot of Chinese goods in his first term, there was some slight impact, but it was insignificant in terms of inflation or price increases. Yes, there was some effects on certain industries like appliances, for example, that use inputs from imports like aluminum and steel, but they were offset completely by tax reform and deregulation, which unleashed the supply side or the private sector to produce more goods and be more productive. So I think that there's little data that I see all these headlines that economists are saying that tariffs will be inflationary. A lot of that was during the campaign when, well, most academics are very pro-Democrat and anti-Republican. It wasn't hard to find 10 or 20 economists or academics to say that Trump's plans, economic plans, were detrimental. Of course, they're going to say that, but more importantly, we don't have a lot of data, and so a lot of this is uncertain, and markets don't like uncertainty. So you're seeing a bit of pain in the stock markets right now. But I would argue long term, there might be some price increases on certain inputs. Those will be replaced by U.S. production of those inputs, notably in steel and aluminum. And ultimately, those input prices will come down. And I think, we really have to keep our eye on a couple of things, one of which, one is prices for sure, but also keep an eye on these trade surpluses and deficits. We just can't continue funding them. The other thing I have to remind you is one of the things you'll hear a lot from President Trump is the word reciprocal. And
Mm.
and that's what is often overlooked. He is just making the tariffs reciprocal to what our trading partners are putting on our exports. And so it's pretty inconsistent to talk about free and fair trade when the trade is actually not fair. And so a lot of these tariffs are just reciprocal tariffs so that there's a level playing field, a fair playing field. The most obvious is in the auto business, where the EU has 10% tariffs on automobiles sold in the EU, and they're putting up to 38% tariffs on Chinese electric vehicles. So this isn't really just a US thing. We're just trying to make our tariffs, a
Mm.
level with the tariffs that are put on not only us, but on other trading partners like China.
Mhm. The Trump administration says the previous tariff exemptions created loopholes that allow Chinese steel to enter the US through third party countries. Now, is this a valid concern, or is this just another round of protectionism?
Yeah, look, he's got a lot. There's a long list of reasons, most of which I've gone through, and I think that might be one of them. I wouldn't argue that that's the top reason. Yes, that can happen. You can ship inputs to Canada and Mexico, and then they come through the border through those countries. But so there will be some of that, but I don't think it's going to really move the needle that much. I think it's more obvious in sectors like oil and refined products where countries with sanctions or with tariffs like Iran, like Russia, are selling to third parties and getting into countries that don't want their goods. For example, Australia has real constraints on keeping coal out of China. They've had their own little trade war with China for years now, and so there's a sort of a black market of goods and services that come through intermediary countries. Yes, I think that's one issue for President Trump. I don't disagree with him on it. I don't think it's as significant
Mm.
as the trade surpluses and reciprocity in terms of fairness on tariffs.